Hi everybody and welcome back to my channel. In this video I'm going to share with you how you can set up different orders to allow you to take profits at different stages during your trade. Now there are a few ways that you can do this. So one of the ways that you can use is magic keys. Magic keys are a really cool tool because with the simple press of the button you can sell part of your trade whenever you want. But I'm not going to focus on that in this video. I want to keep it really simple and accessible, so whether you don't have any extras at all, you'll be able to do this. So I'm going to jump onto the computer. I'm going to share with you an example on TradingView and in Metatrader 4. Let's get to it. Okay guys, so I'm just in my demo account, just checking that. Yep, 101,000, that's definitely my demo account, unfortunately. So to do this, let's load up TradingView, which is what I like to use for technical analysis and planning my trade. And I'm going to do that right now for multiple positions. So let's use EURUSD as an example for this. And this is simply to demonstrate how you can set up multiple positions. So don't focus on my strategy, I'm just demonstrating the trade management itself. Now let's say that we want to get short below this level here. Let's just say at 20 here. And let's say for this that we want to use a 15 pip stop. And I'm just going to set a 2-to-1 profit loss ratio here. Now that would be the first order that we would set up. Let's call this trade number 1. And to plan trade number 2, what I'm going to do is copy and paste this plan. Or really simple way to do this in TradingView is to hold Control, click and drag, and you've got another one here. Now I'm going to set it at the same, so at 20. Going to use the same stop, but for this one, let's say that I want to try to capture more profits and I set a 4R target. So this is just a simple way to view the trade that we're looking to take here. But obviously we're going to need to take 2 different positions, but we don't want to double the risk because above all else we need to keep risk the same in our accounts because it's so important to manage risk. So how do we do this? Well, first let's calculate the risk and make sure we get this correct. So I'm going to keep this really simple. I'm going to use the free position size calculator on my FX book. It's already got EURUSD selected here. And let's just go with a very generic £500 account. Let's say that we ordinarily would want to risk 1% for this trade. And going back here, we've already said we're going to use a 15 pip stop. Now this calculates at 0.04. I'm going to ignore the last digit, so 0.04. Now if we want to take this into 2 position sizes, all we're going to do is half that figure, half the lot size. So if we take 2 different trades at 0.02, then collectively we're still risking the same amount. We're still risking 1% per trade. And that's all I'm going to do for this. So taking this figure here, I'm going to load up Awanda. I've got EURUSD selected and I'm going to select 0.02 for this. Because we know from the calculator we've just used that 0.04 is 1%. So if we take 2 positions at 0.02, we're going to have 2 positions open at 0.5% each. Now this is very flexible, so if you want to take 3 positions, simply divide your risk by 3, and the same for 4. But I'm going to keep it quite simple in this demonstration. I'm going to open 2 different trades and I'm going to halve the lot size so that we have our risk split between the 2 different trades. So all that's left to do now is get into the trades. And using a limit order here, a sell stop, I've just opened up 2 pending orders for EURUSD using the correct risk, and I'm just going to enter in the stop loss and take profit and set that up now. And just zooming out here, all I've done is entered in the stop loss and the take profit using the little plan that we set up here on TradingView. So I've just replicated this that you can see here on TradingView into Metatrader 4. So as you can see, we've got 2 pending orders here for a sell stop. One's price crosses 1.1720. They've both got the same stop loss because we are managing risk. That's so important. So we've got a 15 pip stop set on both of those trades. And for one of those trades, I've set a 2R target. So I'm risking 1% to make 2% for one of those positions, which means that once that hits, that will sell that position, which is half of our 1% risk. So that essentially means that we will be gaining 1% because our target is 2R. I hope this makes sense. For the second position, which has the same stop loss and the same entry, we've set a larger take profit, aiming to make 60 pips on the second position, which would be 4R. Now, because we've split these two up, let's just say that 1R is equal to 0.50%, half a percent. So for the first trade, we're aiming to risk half a percent to make 1%, and for the second trade, we're aiming to risk half a percent to make 2%. Which means that overall, should these trades hit both take profits, we will be able to make 3% from this trade. And this also gives a lot of flexibility, because if you set this up and your first trade hits the first take profit, so that's closed, and you have the second trade remaining where you are aiming to capture more profit, you can then move your stop loss to break even, or you can trail your stop loss. You can even extend your take profit. It gives you a lot of flexibility. And it's really easy to do. So if any point during the trade, you can just double click over the stop loss figure, and here you can adjust your stop, you can adjust your take profit. Once the trade has been activated, because at the moment what you can see here is a pending order, but once it's been activated, you will also be able to edit the volume, so you can manually go in and actually close half of the position if you want to, if you'll change your mind during the trade and you want to take a little bit more off and keep some going. So it gives a lot of flexibility for really managing this trade effectively. Opening multiple position sizes is something that I've only really recently been trying out trading, and already I'm thinking it's a really good way to try to really capture profit when a trade moves. A lot of the time, if the market's slow, the trade might not have much range, and you might find yourself just getting out at the same take profit as your first trade. But recently I've had a few experiences. One was with EuroCAD, where I had such a really nice entry that if I had opened multiple positions, I would have really had a lot of room to really capture profit. And that's why I think that taking multiple position sizes is really useful when trading, because it's a way to ride the wave for as long as possible and to really get the most out of a trade. Anyway, I hope this video has been useful for you. If it has, be sure to hit that like button and don't forget to subscribe below, and I'll catch you in my next video. Thanks guys, bye!